Jeff, the Magnificent Seven, it kind of goes without saying. They've been massive, massive winners. But you and I, in the height of our hubris last fall, late summer, early fall, decided we'd have a little fun and each of us pick one alternative to each of the Magnificent Seven stocks that we really liked. Honestly, we were hoping that maybe they do better, give us some bragging rights, but they had to have something in common with each of the Magnificent Seven stocks that they replaced. Now, we do want to hold ourselves accountable. So we're almost exactly 6 months after that episode was released. Let's hold ourselves accountable and talk about how those stocks have done and what has changed and whether we still believe in our Magnificent Earth 7 stocks.
Yeah, this is going to be fun to hold ourselves accountable. So I'm happy to dig in.
This is Investing Unscripted. I'm Jason Hall. He is Jeff Santoro. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, I implore you to check out our special link. It's fool.com/unscripted. The Motley Fool is going to give you its 10 best stocks to buy right now. Definitely check that link out. Okay, Jeff, so we're going to set the bar really high. The first stock that we're going to talk about is Apple. This has been an incredible winner. It's one of the best run businesses in the world, one of the most recognizable, powerful customer brands on earth, massive cash cow, profitable business. But we thought we could do even better. Are you ready to talk about the stocks that we picked as our alternatives to Apple?
Yes, let's do it. So real quick before we dive in, I'll give the numbers. Since we made these picks, Apple stock is down 1.2%. Starbucks, which was your pick, is down 4%. And ASML, which was my pick, is up 50%. So I've done pretty well and you're struggling, but let's dig in and give a little context here and talk about how these companies have done and why we picked them originally. So why don't you start us off and dig into Starbucks a little bit?
First of all, anybody that hears us say Apple and then stocks alternatives that have to have something in common, you're probably scratching your head. Hopefully you haven't already clicked the skip button, but there are some clear similarities between a company like Starbucks and a company like Apple. As much as we think of Apple as a tech company, it's really a luxury consumer brand at this point. It's one of the most powerful brands in the world. They have pricing power with their products. You think about the nice headphones they sell for hundreds of dollars, spend $1,000 on an iPhone without blinking. These brands are associated with lifestyle and they're incredibly high quality products. The technology that's there is important, but it's really the appeal of the brand and the quality of the product that is so compelling today. And I think that's something that Starbucks has in common with it. Starbucks also has in common with it a little bit of pricing power. We've seen their ability to raise their prices to pass on higher costs. They're also the biggest coffee buyer in the world. And Apple is one of the biggest components buyers in the world. So that gives them some firepower with their suppliers to be able to get better costs. So cost advantages, pricing power, durable brands, international appeal. That was my pitch for Starbucks. Like Jeff said, not doing great. If you factor in the dividends, stock's down about 2.7%, so it's not quite down as much. Still doing worse than Apple. Certainly doing a lot worse than ASML, which you're going to talk about in just a minute. But I do just want to give an update. Since we picked these stocks and now we have gotten some earnings from Starbucks, and I do want to highlight what's happening with Starbucks, how are its results, and why I think, to me, that puts it in a position to be a better returning stock than Apple going forward. So we got to go all the way back to the end of January to get Starbucks' financial results. It's one of the early reporters. Revenue in its fiscal first quarter were up 8% to a record level. If we look at Apple's revenues were up a little bit, less than 1%, pretty flat growth. Starbucks is benefiting from the reopening of China as its Chinese business is started to recover. Comparable sales in its Chinese stores were up 10%, 21% increase in comparable transactions. That's 21% more people coming in to buy Starbucks. They did see a decline in the average ticket, but the bottom line is that traffic is picking up in China. Traffic is very strong in North America. They're passing higher costs along as they always do, continue to see very high loyalty, generating a lot of cash flow. So it seemed like Starbucks is back on an upswing at a time when, well, we're not really seeing the same thing from Apple. Their sales have matured, even with a new model of the phone that came out pretty recently. We haven't seen that pay off with drawing higher revenues. Their Mac business, their PC business is pretty flat right now. It's actually down a little bit. So not a lot that's really going great that indicates that it's going to be the big growth catalyst for Apple. Starbucks, on the other hand, I think is better positioned to continue to grow and driving earnings higher. Jeff, what about ASML?
Going in a completely different direction from the pick you made, but also a company that is absolutely related to Apple. So if anyone doesn't know, ASML is the company that makes the lithography machines that every manufacturer of semiconductors needs to have in order to make semiconductors. And for the highest leading edge chips, they make a version of this machine that they are the only company in the world that makes it. EUV machines, which is extreme ultraviolet lithography that you need for the highest performing chips. So what's interesting about ASML is a couple things to know. So first is that even though we hear in the headlines all this news about NVIDIA because they have AI chips that everyone's buying and they're tripling their revenue and all this craziness, the rest of the semiconductor industry is actually still in a cyclical downturn. It's a cyclical industry. Right now, they're in the downturn. And ASML's results are reflecting that. They're still growing pretty strongly and are profitable and generate positive cash flow, but they are not blowing the roof off the joint. And they're even saying that 2024 for the whole year is going to have basically flat sales to 2023. So they're saying right out the bat, like, don't expect anything great. 2024 is sort of like a transition year. We expect to see growth reaccelerate in 2025. Now, you would think when a company says that, there'd be a massive sell-off of the stock and it would become cheaper to buy. That's not the case. The stock's performed well, as you can tell by the results over the past 6 months. It's still as expensive as it always has been. It's always an expensive stock because analysts and Wall Street know this entire semiconductor industry cannot operate without ASML. The number I think is important to keep an eye on, and this is, I think, part of the reason the stocks perform so well, even as they're forecasting basically flat growth, is their backlog. At the end of 2024, they had a backlog of 39 billion euros. So what that means for us as investors is even as the industry is in a downturn and there's not as many new orders coming in, they have plenty of business to fill all their capacity in 2024 and then be ready when the orders pick back up in 2025. This company continually invests in research and development. They have to stay at the leading edge of everything. So they're in fine shape. They've performed really well. Don't let the downturn in the semiconductor industry scare you off from this company. They are essential to the industry. And that's why I picked it as an alternative to Apple, because you can't have Apple products without semiconductors and you can't have semiconductors without ASML.
So Jeff, last question before we wrap up the video. You've certainly delivered the better results with ASML over the first 6 months of our little mini contest against each other and against the Magnificent Seven. My question for you, ASML, I'll answer the same question for Starbucks in a second here. ASML, are you a buyer at these prices? Are you more wait and see? It's definitely a buy and hold business, but the question is the stock, do you think it's a buy right now?
I have a hard time waiting for a buying opportunity for a company this important to an industry. And I have a feeling it may never be truly cheap. So I think that unless the valuation becomes absurdly high, this is one you just have to kind of hold your nose and buy at a high price and just hold it.
Yeah, I think over a 5-year period, today's price still works out to be a pretty decent return for investors. My answer for Starbucks, I was willing to make it my magnificent-er than Apple stock 6 months ago, Jeff, at a higher valuation. The stock has gone sideways down a little bit, but the business has continued to improve higher earnings. It trades for a better multiple right now. And I think Starbucks is a business that when you get bargain opportunities, you should be buying because it is a high quality business. And the market will, as we've learned, give us those bargain opportunities. So I think right now, Starbucks is certainly worth buying.